If you're still unsure about how mortgage insurance works, I think it's really handy to just show this chart. This is literally what we go off of when we're calculating mortgage insurance. There's only a few different companies that offer mortgage insurance, and we run your information through all of the companies to get the lowest premium possible. Again, mortgage insurance is put in place to protect the lender if you're to default on your loan. That being said, as you can see in this chart, the less money you put down, the higher your mortgage insurance is going to be. Why? Because if you put less money down, you have a little less skin in the game. And so the investor wants you to pay more to insure that loan to protect the lender. Same thing on higher credit scores versus lower credit scores. You can see on this chart, there's a pretty big difference between if you have a 760 plus score and if your credit score is way down here, your mortgage insurance premium could be double, if not triple, based off of your score. If you have any questions or tips and tricks on how to fix your credit to maybe get a better score, feel free to reach out.